All right, how's it going, everybody? I'm going to make another recap video. This video is going to go over patience planning for day trading in the futures market, the importance of getting confirmation, looking for additional confirmation in different order flow tools and things like that, and really just planning for anything in the markets because anything can happen. This is a perfect day to go over the principles of planning and why it's so important to plan for both scenarios, the market going up, the market going down. Today is April 28th, 2025. I made about $1,700 in the market here today, day trading, and I'm just going to run you guys through what my plan it was, how I executed that plan, and what I was looking for in the market so that you guys can start to develop your own intraday trading plans and just act accordingly. Because once the markets are open, and if you don't have a plan set ahead of time, it's going to be really difficult to make the right decisions in the moment and know exactly where you should be getting in, taking profits, and things of that nature. Okay, so I'm going to run through some of what I was looking at this morning. When I was going into the markets, I was trading the micro NASDAQ futures. And from a higher time frame perspective, this is a 4 hour chart. We had a nice 4 hour uptrend in the market. And then if we go down to the 1 hour time frame, we can see that the orange line here, that's your 1 hour uptrend. All right. So 4 hours up, 1 hour is up. Go down to our 15-minute time frame, more of our intraday trading territory. And we can also see that the green line is up. That is your 15-minute uptrend. So 4 hour up, 1 hour up, 15-minute up. All right. All things kind of pointing to up at this point. What I do is that I usually trade the first 2 hours of market open. So that means that I always come up with a plan before the market opens. And what I'll do is I'll take a look at the trends, just get an idea of what this market is doing. And then I'll start plotting out some of my key levels. I'll take a look at the overnight trading data, which those boxes indicate. Those are the Globex sessions. And then the blue line there is the volume weighted average price, otherwise known as a VWAP. And all of these things, plus supply and demand, are what give me the information I need to be able to develop a good plan on the day for trading. All right. So if you were walking into this market today and you just saw up, up, up on all of these time frames, you would assume, okay, yeah, we're going to start trending higher. All right. If we go out to the higher time frames again, I'll go to a daily chart here. We don't really see any major supply until we start to get up to that 20,000 level up here as well. And so there was quite a bit of runway to the upside. We see all these uptrends. We see that there's not really any major supply until quite a bit higher. We're thinking, all right, yes, we can indeed just have a bias and trade this market up today. All right. This was the view of the market when I was walking in. I always kind of start on a 15-minute chart to really plot out my levels and get an idea of what this market was doing. I may go down to a 5-minute chart to see additional levels if I need more context, but usually the 15 is where I start. All right. So we see all those trends. Those are some of the notes that I'm making in my pre-market plan. All right. Then we have the overnight trading data, and we can see that the market sold off overnight, and we were getting under VWAP and holding under VWAP on subsequent retests. All right. And then the market went and hit a double bottom here, right at the 19,400 level, key level. And then we started to push back up. We pushed above VWAP, and then now we're holding above it as support on subsequent retests. So those are all the observations that I'm making prior to developing my plan. What I do is I go and take a look at the markets, I observe the levels that are important, and I just write down my observations and I plan around my observations. I plan for both sides of the market. I plan for if the market's going up, I plan for if the market's going down. All right. And I really come up with two scenarios for each. All right. How am I going to get bullish if the market starts going up? How am I going to get bullish if the market starts going down? How am I going to get bearish if the market starts going up? How am I going to get bearish if the market starts going down? So I plan for all scenarios, because if I walk into the market with a bias and that bias is not correct, well, then I'm going to just get losing trade after losing trade and not know how to adapt to different market conditions. Anything can happen in the market, so we have to plan accordingly. So with this in mind, these are kind of my observations. There's no overhead supply until up near that 20,000 level. Overnight trading is pushing us back above VWAP and holding above it on subsequent retests, holding that 19,400 key level down below. And then we got demand down below at about 19,375 by 19,000, let's call it 300. All right. So those are kind of the areas that I'm planning around. So with this in mind, how am I going to get bullish? Well, it's getting bullish is actually the easy one here, because if the market continues to hold above VWAP and then we start to see a breakout above the prior day's high, that would be the last Friday's high, a strong breakout above the prior day's high, and ideally above that 19,600 level, then we can, ideally start looking for some longs. If the market trades up at the open really aggressively and we start pushing through, okay, on a pullback down, we'll start to try to latch on. All right, that's my plan for if the market goes up to get bullish. If the market starts coming down, what I want to see is it really hold VWAP or hold above VWAP and that 19,500 level. These whole numbers in the market, they tend to have a lot of trading activity around them, so I keep an eye on them. Just kind of call them key levels in the markets overall. All right, don't mind the sirens out there. Hopefully that passes pretty soon. All right, and so I have two plans. All right, two to get bullish. If the market starts trading up or holding above VWAP, we start to break out higher, strong breakouts higher, then I'm going to be getting long. If the market comes back down to VWAP and holds there and I can find some evidence of buying support down there, then I will get long as well. All right. If the market breaks out above, all right, what the market sometimes will do will break out above, but that breakout is really just met with low volume, low volatility. It is a breakout fake out. So we don't see any major supply, but it doesn't mean that there isn't the possibility of new sellers entering into the market as well. So a lot of times when you get these little breakouts above key levels, that triggers everybody to start getting long. All right. All the retail traders that are getting long, it's a perfect trap setup for the big institutions, short sellers, to be able to come in and use that liquidity to fuel a short, fuel a move lower. Those are a little trickier to identify because you have to use order flow tools to be able to identify things like that. Is that what you would want to see? Is that it would be a low volume breakout, not a high volume breakout, and then you'd see evidence of trapped buyers up there, which I will go over when we get over to Bookmap, which is an order flow tool that I use. All right. So if we have a fake out breakout above, we could potentially fade that breakout with a move back down short, maybe targeting near VWAP at that point. But then if the market starts coming down at the open, all right, what do we need to see from the sellers in order to get bearish? Well, there's a lot of demand. There's a lot of price support in the way. So if the market starts trading down, we really want to start to see it break through this level of demand before we're looking for shorts. And also, we have this higher low in the market, which acts as the 15-minute control swing low. So realistically, if we start breaking down below demand here, there's not a lot of runway to short, but you might be able to find a short near after we break through this demand level near the lows. And of course, if we start breaking down below those lows, there's more runway to the downside that way. All right. So plan for everything. Plan for everything. A lot of the levels that we're going to be looking at are levels that we already have predetermined in the market. But then for taking entries, a lot of those entries will come as the market opens, as new demand or new supply enters into the market. I don't trade on a 15-minute chart. This is where I do my planning. I'll go down to a 15-second chart, and that's really where I will take my entries, all right? And I'll be watching the 15-second chart in order for those entries. Before doing all of this, I write the plan out. So this morning, about 40 minutes before market open, I wrote the plan out with everything I just went through with you guys. So I write down my observations. I say the 4-hour, the 1-hour, and 15-minute trends are all up with no major supply up until the 20,000 level. Overnight trading found support at 19,400 key level and is currently holding above VWAP with support on retests. All right. And then we say that we got the demand zone below and we have no major news. So my bullish scenario, as long as the market holds above VWAP, I want to focus on longs and trail stop up to 20,000. If the market starts selling off, wait for a break below 19,400 into the 5 or 15-minute demand level for confirmation of trap sellers before getting long. All right. So if that sell-off happens and we get below the Globex lows, below the overnight lows, and break down into demand, I like that as a trap setup for sellers. All right. We're breaking below overnight lows and there's some demand sitting right down there. If I can see confirmation through order flow, through volume, that there are trap sellers down there and buyers are starting to step in, then I'm willing to take a long. All right. Bearish scenario. If price breaks above the 19,600 with little effort, look for continuation of trapped buyers, or look for confirmation of trapped buyers before getting short, targeting down to VWAP and then 19,400, the overnight lows where there was support. If the market starts selling off, wait for a strong push below 19,300 before looking for shorts down to 19,250. All right. So we're saying if we break below that demand level, there might be a little bit of runway to short this thing for about 50 points or so. We'll see. All right. A break below 19,215 will terminate the 15-minute uptrend. All right. So I have a plan. Now, everything looks like it's going up, but that's why you have to create a plan, because once we get up to market open here, you'll see exactly what happens, and I'll go through all of the trades that I made here, how I made them. Some I'm taking on proximal entry. I'm just putting a limit order. I'm not waiting for confirmation. And others I am waiting for confirmation. When a new intraday zone forms on the 15-second chart and there's a strong move out, there's a strong breakout, there's a strong show of strength from one side of the market, I'll just go ahead and place that order. I don't need confirmation. If we pull back to that level of demand or supply, then I'm in, right? It's areas that have been tested a couple times or areas that are potentially counter trend. These are where you need to look for confirmation, all right? So always be conscious of your capital and what that might look like, all right? So the first trade on the day was a loser. Let's just go ahead and take a look and see what happened. And I'll bring up the order flow tools for you guys so you can see that stuff as well. So we get market open here. Market opens, rallies a little bit, and then we come back down towards VWAP, and we start to rally higher, all right? Now, I actually had an entry down here, but it got missed. My entry was a little bit lower. What I was waiting for, there was a demand level from overnight right near VWAP, a little bit under it. I was waiting for a stronger push down below VWAP and then a nice pop from the buyers. I was watching order flow at this place to take my entry. And what if we bring up the book map here, then what we can see is exactly that sell-off, all right? So if I zoom in on this here, and if you've never looked at a heat map before, this just takes us behind the markets, behind the candlesticks, all right? The actions of the buyers and sellers. It's essentially a visual representation of the order book and everything that's happening. So the big red dots, those are aggressive sellers. Those are market sells coming into the market. And then the big greens are market buyers coming into the market. So the market participants, the market orders, those are your aggressive participants. Those are the people that actually move the market. And then where you see these lines of red, those represent areas where there was passive liquidity on the order book. So while the market was coming down, there was passive buyers with waiting to get filled at certain prices. So if we take a look at what was happening here, that initial sell-off was pretty aggressive. These sellers come in, and then these passive buyers get filled, and the sellers are so aggressive that they just push right past that. If the buyers are truly strong at an area, then when they're met with sellers, they're going to absorb all that incoming supply, and the demand that exists there should outweigh the supply. all right? In this case, all of those areas of high liquidity were not enough to hold the market up. There was more aggressive selling than there was passive buying, all right? Then we get down to the bottom here, and we start to see there is more liquidity being put on the book. And then you again see these aggressive sellers. This is near VWAP on our chart. So if you just look back and forth, it's the same actions, just a different visual format for that. And we can see exactly what's going on here. And that's going to give us more clues and indications of what the market's actually doing. So the market sells off aggressively, and then you can see some aggressive selling near the lows here. But then there's no follow through. All right. If there's a lot of effort and no reward, meaning that there's a lot of selling, but there's no price follow through as a result, well, that indicates that there could be this larger passive buyer absorbing all of that there. So what we can see, and you're not going to see all of the biggest orders on the order book because institutions oftentimes use what are called iceberg orders. And if you know an iceberg, the most of that order actually will sit underneath the surface, so you can't see it. It might be an order for 100 lot on the book, but maybe it's something like 1,000 lot, 10,000 lot. You just can't see all of those orders. That's why I pay more attention to the aggressive participants, and I will again look at the areas of liquidity, but I put less emphasis on them. All right. So we see these aggressive sellers down here, no follow through. Come up a little bit, come back down, more aggressive selling, and no follow through. All right. That would have been enough confirmation given where we were in the market, given all the trends, given the pre-market plan to get long. It's just my entry was a little bit lower. All right. So I missed that one. And then the markets start rallying higher, and I'm just watching, wishing I was in this big move. All right. And now we start to break out above the Friday's intraday high, which is a purple line, and above that 19,600 level. What we want to see at this point is a really strong breakout above. And you can see on a candlestick chart, it looks decent so far. But if you're paying attention to only the candlestick chart, then you won't be able to see what's actually going on here. All right. And then what you can see is that you get this little breakout above 19,600. And there, if you were trading this chart, you might have tried to get long there for a move higher. But what I was seeing in Bookmap looked a little different. All right. So if we go up to that breakout above, we can see some nice aggressive buying on the way up, eating up all the passive sell liquidity. And then we break above 19,600 and Friday's intraday high. And we can see that there's actually a lack of effort. There's still a decent amount of buying here, but compared to the move up, not nearly as much. Look at how big these green bubbles are compared to these. Still decent buying, but not as aggressive. And when you see that these buyers are stepping up here, all right, one, a little less aggression to the upside, but two, once we're getting aggressive like this, when we're above, we kind of cleared all the highs, it should just, start popping back up. But what you see is the same thing you saw down below, is that the aggressive buyers, they step up and there's no follow through in price. All right. So that's a red flag right there. One, the lack of volume on the breakout above. All right. And then two, no follow through from those aggressive buyers. All right. So that right there, once we started to actually break down a little bit, that would have been a good indication to get short. All right. But again, I missed it. I'm more of a pullback trader than a breakout trader. So what I was waiting for, if I just play this in time a little bit more here, what I was waiting for was a pullback to the new intraday level of supply that formed just above the 19,600 level. So I would have happily taken a short if the market came back up to that level and then started coming down. But the market never came back there. Therefore, I didn't have a trade. All right. So there was two potential areas where you could have got long and then got short according to the pre-market plan. And if you were using an order flow tool, maybe you could have caught those moves. I just happened to miss them. So I'm sitting on my hands and now we're just waiting. All right. So now we can see that where that new intraday 15-second level was formed in the markets, the markets are going to start coming down to this. It's aligning with VWAP. All the outside trends are up. All right, we're above VWAP. There was a strong amount of buying coming through there. This is where I was actually planning to get long. All right, so I had a long set up down here, and I was waiting for a pullback. It's a fresh level. There was no confirmation needed in my case here, so I just went and set a trade there. And if we just look at the results of that, the first trade I made on the day here was a loss. All right, so you can obviously know what's going to happen there is that the market comes back to that level and pushes right through. Now, explaining the logic of all this, in the chat, I was going through and just kind of calling out play by play what I was looking at, everything like that. And so if we take a look, I'm saying at 756, I said, I'm trying a long down here on MMQ, exercising caution and lowering risk because of the shallow breakout above 19,600 and sell off after. All right. So I was already playing this a little cautious. I reduced my risk slightly on this one just because I didn't like that we weren't able to hold above. Maybe momentum is shifting a little bit in the market. If we go ahead and hit play, we'll of course see that that's indeed what happens. And very quickly, we just get sliced right through. There's not even a bounce coming out of that area. All right. So sellers have truly taken control of this market. All right. And now if we take a look, all right, this is why I love these time frames on the market. Where do you see that momentum really came from? All right. There's kind of two areas, but the first area would certainly be right here, that little drop, base, drop in the market. We had a drop, base, strong drop through demand. These sellers truly overcame these buyers with really what looked like very little effort. So that was a lot of really strong selling coming from there. And now we're back below VWAP, all right? We're getting that true bearish scenario panning out at this point, false breakout above, and now we're breaking through the new intraday demand levels. This was my next level of interest. So in our pre-market plan, you can only plan for what you see in the market ahead of time. But as the market develops, you're still acting according to your plan, but the levels might change based on where buyers and where sellers step into the market intraday. So now I'm focusing on shorts. I just got stopped out, and I'm going to be waiting for a pullback up to that level of supply for a move back down to that 19,400 level, and call that a day there. All right. So if we just speed this up a little bit, we'll see exactly what happens. Market goes down. We start coming back up. Chops around there. Chops around there. And we get one big push down, and then it goes up to it. There's a push down. Okay, boom. Now I'm in. All right, no confirmation needed. This is where I took my entry, right on that line. So that's where I got in. All right, and I had a target that was going down all the way to 19,420, I believe, a little above the Globex lows. This one actually was going down to 19,380, but you'll see either way, it was a great risk reward, like a 9-to-1. I mean, you can't complain there, right? So let's just see what happens here. And I'm going to slow this down a little bit because now I'm actually in a trade and slightly in profit at this point. I have a stop loss just above that level of supply, and I'm going to manage my stop loss as the market moves down in my favor. All right. So I'm starting to get paid on this thing. Awesome. All right. Now we get that strong breakout below. We get a new drop, base, drop through a level where buyers stepped up intraday. I move my stop loss down to lock in profit, but I'm still going for the bigger move down to 19,420. All right. And so this is really important because trade management, managing your expectations. Now it looks good. Like everything looks good on this trade. And if you got out near these lows, that would have been a beautiful trade in and of itself. I was going for a bigger move, got to let the market breathe a little bit. I've locked in essentially a 2-to-1 at this point, maybe a little bit more. And I'm just waiting for the market to play out. So if we hit play, we can see that there's some strong buying that comes in, holding those lows, and then I go get stopped out for profit. All right. So on the second trade there, you'll see that I made 190 on that. All right. Yeah, that's correct. Yep. So 190 on that. Must have been not that many contracts traded there. I think I did 3. So lower risk overall, but got my money back. So I'm essentially break even on the day here. All right. Would have liked a much bigger move, just didn't get it. Now the market is coming back up towards this level of supply again. This level of supply was already tested intraday. And really what I'm looking for now is that I'm going to be watching the order flow up here and seeing if sellers need to reload for a bigger move down. So I'm not done yet. But since this level is not fresh anymore, it's already been tested once, I need confirmation in order to take this trade again, if I am going to take the trade again. All right. So we'll play it forward just a little bit. Market starts coming up to back to that level here. And then we start to break down. All right. I think we actually get a move higher. So I was waiting for the market to push back up. Yep. Okay. So now I'm watching order flow. We're getting right back up to that level of supply here. I'm just going to bring it up on Bookmap so you guys can see what that looks like. So if we go over to that move once again, and that is going to be right up here, I believe. That's 19.5. Here, I got to back this up. Give me 1 second. There's the pullback. Where is it? It's right up here. Okay. All right. So let's see if we can spot the same thing. Now, that level in the market was about 19,536. All right. So you can see that on this move up here, that was the original short right here. Right here in the market is where I got stopped out for profit. Now the market's coming back up to that level of supply. And what do you see on the order flow? All right, you see a lot of aggressive buying on the way up and very strong sell side liquidity, passive sell side liquidity. So the sellers are indeed reloading up here. And then what do you see? You see the buyers get aggressive. They try to push the market higher, and they can't. That's a lot of aggressive buying, but no follow through. A lot of effort, but no reward. All right. So once I saw that and we started hitting that level of supply, that passive liquidity, and then the market started coming down, I saw some aggressive sellers stepping in. I took another shot short, just protecting right above that that sell block of liquidity, or really above that supply zone once again. All right. So that was the confirmation that I needed, but I needed to wait for confirmation. Aggressive buying, no follow through to the upside. Sellers reloading. I can see it on the heat map here. And then we start to see the evidence of aggressive sellers stepping in. So that's where I took another short. And then we can see how this one plays out. Boom. And then we get that really nice move down. Okay. Awesome. And again, I'm protecting profits along the way. So while the market's moving down, my original stop loss was above that level of supply. And then I bring it down, essentially break even, where we get this little rally base drop. It retests it, and then we drop lower. All right. Now I'm just waiting for the market to provide me with more structure so that I can lock in more profits. And I'm going for the same target, 19,420, which is just above the overnight lows. And I was suspecting that we were going to break down below the overnight lows, but given the choppy and whippy nature of the day, I didn't want to sit through another breakout if it was going to happen. I already got punked out of this position once. I thought I would just go for a smaller move. All right. So if we hit play here, market comes up. All right. Up towards VWAP. There's a little drop-based drop there, rejects that VWAP and starts breaking lower. I move my stop loss down just above VWAP at that point. Now again, I've locked in another 2-to-1 on essentially the same trade that I've taken twice. And if we just let this thing play out, this thing really starts breaking down, comes back up towards VWAP, respects it this time, and then we get that nice breakout down below, and then we go and hit my target, which was at 19,420. All right. So 19,420, hit the target. I'm out. All right. So on this trade here, now the first one I locked in about a 2-to-1, and then this one locked in. Oh, let's say, and I didn't enter right on the proximal. I probably entered something like that. On this one, I was able to lock in a good 6, or it was probably like more like a 7-to-1 trade. All right, 7-to-1 on the day here. All right, so very good. So if we look at the profits, that was the biggest trade there, that $1,300 profit for 23 minutes. And this one was a mistake. I accidentally hit short really quick, so I got out of that quick. All right, and then I was going to be done for the day, but then the market started coming back down to our 15-minute level of demand, which is where we saw on Friday some buyers step in. All right, so again, in this level down below, I'm waiting for confirmation. I'm waiting for confirmation. Once we get in it, don't see anything yet. All right. And then we start getting towards the lower end of this range. And what I saw on Bookmap was what gave me the confidence to take a shot at this thing long. Again, this is a wide area. I don't like trading areas that wide. I like going down to these really low time frames and waiting for the moment where you can really see that there is trap sellers and aggressive buyers starting to step in. All right. And so that's what I did. Is that if we just go over to Bookmap once again, we'll be able to see that near these lows, that exact sort of thing happened. All right, we're in a level of demand. We're selling off aggressively. All right, and then what we start to see, and I'll really zoom in on this here, is that these sellers aren't able to start pushing the market lower, and then it's followed up by aggressive buyers stepping into the market. That for me was enough confirmation. We had a lot of passive liquidity below, potentially spooking sellers from continuing down into this move. And then what we can see here is that we get a nice little pop out of this. So I start getting long right here. And now I'm in long, and the market starts trailing up in my favor. I had really mitigated risk at this point. And then what I was doing is I was protecting the swings of this thing along the way. We put in a higher low, higher high, a rally base rally right here. Excuse me. And then what we can see is that this move is going to fail. All right. Then this move fails. Okay. So I was able to lock in essentially another 2-to-1 on that trade or so. And I was able to load in with a few more contracts because my risk was so low. I got in pretty much near the lows by using order flow and was able to have a stop loss just below that demand level. And we got a nice little pop, but then what we see is that this entire move actually fails and I'm done on the day. All right. So that's enough of the replay mode, but hopefully what you guys can see here is the importance of patience and planning. If we just go back to originally what we were looking at coming into the day here, is that if you were just coming into this day with a bias, if we back this up once again, with a bias, all the outside trends are up, all right? 4 hours up, 1 hour's up, 15 minutes up. We're holding above VWAP. Everything's looking really bullish. Well, then you would have got trapped like everybody else that thought this thing was going up higher today, especially when we started to break out above Friday's high. All right. And so what you really need to do is just plan for anything in the markets. And if you use an order flow tool for confirmation, you can do something like that. You can take a look at volume. There's a lot of different ways that you can get confirmation in areas, but I think that order flow is probably one of the strongest ways to do so. All right. So it's been a while since I made a video like this. Hopefully things like this will help you guys develop your own plans. This is really kind of the turnaround point in my trading in the last 3 years or so, when I started to develop pre-market plans and then trade my plan. All right. Sometimes the plans don't pan out. Sometimes you see things wrong. Right. So like, for instance, if we look at what happens here, is that the market breaks through that demand level, finds a bottom, and then just starts rallying on the day here so far. So towards the end of the day, I wasn't trading that at all, but you know, that part of my plan was actually off a little bit. But all you can do is create a plan, follow your plan. And what you need to do to create these plans is just observe the market. All right. Plot out the trends, plot out your key levels of supply and demand that were formed in high volume sessions, New York session. Take a look at the trading activity that happens around your whole numbers, all right, around the volume weighted average price. Take a look at what the overnight trading has done and see if that can give you any clues as well. And then you just develop bullish scenarios, bearish scenarios, and you plan for both sides. All right. If the market goes up, how do I get bullish? How do I get bearish? If the market goes down, how do I get bullish? How do I get bearish? All right. Those are really the key points to this, because then you're not doing any guesswork. When the market opens and prices start moving, you already know exactly where price needs to go for you to take action, and what price needs to do in order for you to take an action, long or short as well. All right. So I'm going to end the video there. Hopefully that was helpful for you guys, and we'll see you next time. Thanks so much. Bye.